Hey guys, busy time of year financially. A lot of information coming out as we get close to the end of the year, specifically retirement plan limits for next year. What happens with them? Most of the time they go up. Doesn't happen all the time. There are some changes for 2024. I'll break it all down for you right now. So first off, we'll go over the big one, company retirement plans. So we're talking 401ks, 403bs. If you're a public employee of That's terrible. My phone just went off. Hopefully you guys didn't hear that. We'll make that quiet and we'll go again. So first off, the big one, employer retirement plans. And so that for most folks is a 401k or a 403b. If you're a public employee, that'd be your 457 plan. If you're a federal government employee, we're talking TSPs. So they all have the same limits. Used to be $22,500 was the max. That got bumped up $500 for next year. So it's now $23,000. $23,000, the most that you can put into the plan on your end. The employer's allowed to put in their money as well. If there's a match or profit sharing component that comes in, that's separate from the numbers that we're talking about. We're talking about what you can get into a plan. Up $500 across the board on all of those for 2024. Match did not change. If you're over the age of 50, you can put in a match. That match was $7,500. That match is still $7,500. So $30,500 for those watching the video over the age of 50. That's the most that you can put in next year into the retirement plan at work. Now, if you work for a small business, it might be different. You might have a simple IRA plan, still a company retirement plan, but the rules are different and the contribution levels are different. They also bumped up the contribution level $500, but the cap is lower. It's $16,000. That's the most that you can put in 2024. Used to be $15,500. It's now up to $16,000. Same thing with the catch-up. Catch-up stayed the same. It's also a lower limit, so it's $3,500 that you can get in there, which means the grand total, if you're over the age of 50 and you have a simple IRA plan at work, is now $19,500 in 2024, separate from any company match. Now, while bumping these limits is nice, it's a good thing to be able to put more money away for retirement. I'll tell you, and I've worked with a lot of people to plan their retirement. Almost nobody reaches these levels. It's really, really difficult to save $30,000 a year for retirement. If you are, great job out of you. Probably one of two flavors. Either you're super serious about putting away every last dollar that you can. FIRE folks come to mind. The financial independence, retire early. I'm going to sock away everything I can. Some of those folks hit these levels even with a lower level of income because they are super strict about their saving. The other folks that I see reaching these levels are really high wage earners. If you make a whole bunch of money, it's a little easier to save $30,000 a year than if you're the average American. If you think about it, most folks that I talk to save somewhere between 5 or 6% and 10 or 11% of their gross pay into their retirement account. From my videos, I always tell you 15% is the gold standard. If you can get to 15% over a long period of time, chances are good you'll be able to recreate your income in retirement without too much stress or problems and be able to live a comfortable retirement. That's the goal, at least. $30,000 is more than 15% of most people's income. You can do the math on it, but you've got to make quite a bit of money if you're 15% and you're managing to get 30,000 away. So most of the time, if anybody's getting near those limits, it's somebody that is saving a ton of money for retirement. So while it's a change, I don't know that it's life-changing for anybody to bump these $500. The other side of that, where it does make a difference, retirement account contributions, IRAs, not the company stuff, traditional IRAs, Roth IRAs. I see lots of people max these out every year, and those also went up. Drum roll, guess how much they went up? They went up $500, same as the other stuff, right? Somebody at the IRS was like, give them all $500, it'll be great. $6,500 is now $7,000 for next year for your contribution limit. Catch up, again, stayed the same. The catch up on a traditional or Roth IRA, $1,000. So catch up's an additional $1,000. Your baseline contribution is $7,000. So if you're over the age of 50, you can get $8,000 put away into the traditional IRA or the Roth IRA in 2024. Hey, if you're working on planning your retirement and you'd like to get information like this delivered right to you, check out the link in the description. You can sign up for our mailing list. We send out a couple of emails every month just with timely financial info, things that change or things that are going on that we want to make our clients aware of. We can also make you aware of it as well. Check out the link. So some additional changes for 2024. I'm not going to math this out for you because I don't want to math you to death in a video, and we've already got a lot of numbers floating around in this thing. But be aware that these changes took place as well. Income limits for phase outs. So things like traditional IRA contributions that you can deduct. You have to be below a certain level of income to be able to deduct your IRA contribution from your income. That raised up this year. So in 2024, that's going to be higher as a result of these changes. Same thing with Roth IRA phase out. So there's a point at which you can make too much money and you just can't contribute to a Roth. That's also gone up. So that's still a thing, but the threshold has risen. At some point, I'll do a video about that, but like I said, I don't want to put you to sleep with nothing but math on the update today, and so we'll save that for another time. The last thing is your charitable contribution limit has gone up as well. So those are really the big ones from these most recent changes that were announced. At the end of the day, these are good things for all of us because it's more money that can be put away in a tax-advantaged fashion for the future. And as you know, you got to put away money for the future if you want to have money in the future. Nobody's out there just putting it away for you, unless you've got some really rich uncle who's going to leave you a bunch of money or something like that. For most of us, you got to put away your own money, and so being able to put away more is a benefit. If you're looking for ways to do that, check out this video right here. I did a video about saving additional money, how to do it where you're not really going to notice, but it can make a huge difference over a long period of time.